Today's market call is presented by FactSet, financial data and analytics powered by tomorrow.
All right, welcome to the market call. It is May 20th, 11 a.m. on the East Coast. I'm Dan Nathan. That's not Guy Adami. Guy Adami will be in here. He is fighting some traffic here in New York City. I don't know if you guys know that, but every once in a while we have a little bit of traffic here. I'd say a lot going on, but, I just want to pull up the S&P chart for a second here because you can see not a whole heck of a lot was going on. I love those reports in the morning. I'm probably like you guys. You wake up, you look at what's going on in the markets, you look at the futures, that sort of thing. And then there's always like some headline talking about where the futures are. And they're like, the 6-day rally is about to stall, which I think is interesting. How do they know? Like yesterday, for instance, you could have said the same thing. S&P gap down 1%. And then by the end of the day, we're unchanged. The thing about this, and we talk a lot about V reversals here, and I know Guy and I spent some time yesterday, is like, sooner or later, you lose a little of that gusto. It feels like we're losing that right now. Any check back towards that 200-day moving average, which is obviously pretty flat, you have a scenario where that is the line in the sand. We also talked about that gap. Look who's here, Guy Adami. You know what, Guy? We have an empty box for you right there. You see what's going on there?
I'm here.
All right. Look at you. And you're all knotted up as usual. You got a suit on.
Are we live?
It's live, Guy.
It's fucking bullshit. Sorry, Amanda. Can't see my tie. I left the house at 9:30.
Look at this. Oh, people, did you know that you were going to get a rant from Guy Christopher Adami today?
Let me log in here.
Log in. I'll just do a little more talking. We had to start on time. We started on. No, you know what? Early is on time. Isn't that what your football coach used to say to you?
On time is late. Late, don't even bother.
Don't even bother. Hey, Guy is in a suit. Well, he often wears a suit, but today he has a really interesting conversation. I'm going to dox you. Can I dox you? He is sitting down with Gary Cohn. He is the former president of Goldman Sachs. He was also in the White House in the first Trump administration. Was he the National Economic Advisor? Is that what he has? The same
role, I think, that Lutnick has now.
No, that's Commerce Secretary.
So I'm not
even know. You know who it is? Kevin Hastert.
Kevin Hastert.
Hastert. Gary was instrumental in putting through that tax bill in the first. It'll be interesting. Are you guys going to talk a little bit about that? What he thinks about this current bill?
We only have a half hour. It's a Paribas conference. Ray Dalio speaks after.
Wow.
Yeah, that's actually pretty cool. So it's a pretty interesting conference. So Gary and I have done firesides before, so we're going to do one today.
Excellent. I've listened to them. Gary's also, and you mentioned this a bunch of occasions. I think last year was interesting. I think IBM was one of the best performing stocks in technology, and Gary joined, the chairman of IBM a couple years ago, 2-3 years ago?
He's the president or chairman.
I think he's chairman of the board.
Some role.
I'm going to go find out. I'm going to hit my FactSet machine.
Within 6 months, IBM was doing nothing. And it goes to show you, and again, I apologize to people, but it goes to show you when you bring the right people on board, a lot of change can be made. Think about AMD with Lisa Su.
Look at that thing.
Yeah.
Look at that thing.
Go back longer than that.
I know, but that's crazy. Yeah. This is one of the very few tech stocks that is literally approaching its prior all-time high.
So you could see how flat that stock was for all those periods of time.
Even go further back.
Gary joined in, I want to say 22.
I'll tell you. Wait. Hold on 1 second.
But you got his sort of feet underneath him, and you see the trajectory since. Now, look, it's not all Gary Cohn, but the point is when the right people come in, Lisa Su at AMD, Satya Nadella at Microsoft, which was, by the way, left on the sort of side of the road for a long time. These people can make a huge difference in terms of just turning around the culture and turning around the businesses. But let's talk about today's market and see what's going on here. I think yesterday, Dan, when we were doing our show at 11, yields were a story. Something changed midday to late in the day. The TLT rallied, yields moved back down. It's clear that 4.5 or so is the sort of line in the sand. More importantly, I think that 5% level in the 30-year has people sort of concerned. I don't want to get too wonky, but I've been reading a lot about JGBs over the last couple of weeks, and the bond market in Japan
bad auction yesterday, right?
Really more than bad, really deteriorate. And you have people internally saying that the situation they're facing in Japan right now is worse than what Greece was facing
from a
pre-COVID. So there are a lot of things out there. Now, look, I don't want to get too bogged down in Japan, but the reality is, with Japan and China, these are the two largest holders of our debt. So you have to be cognizant of what's going on sort of around the edges.
Yeah, no doubt. I mean, I think it's interesting that you just said the line in the sand at 4.5%. We've had volatility between 4 and 4.5. I mean, one of the things that's interesting is to start out the year, we had that quick move to 4.8%. And it just seems like we're stuck as far as yields are concerned. And, I don't know, Guy, you tell me, we got a lot of data that's going to be coming up. We have the jobs report in like a week and a half, weak data. Who knows what that means? A lot of folks are not pricing in a 25 basis point cut maybe until September. So you have this situation where maybe you see the data kind of slowing a bit, but you also see this inflationary pressures. So it's a tough one, man. Let's go back to the S&P 500 for a second, because I was talking about before you got in here for a second. You've seen this move, right? You gapped up. We talked about it yesterday. Feels like we're kind of like, I don't know, man, like maybe we kind of retest that 200-day moving average. And who knows? I listen, it went from max bearishness about a month ago to right now we're past that euphoric stage. I know that we have a slide here a little bit about what Bank of America is saying about equity risk premium. And I also want to correct something yesterday, Guy. When we were talking, I said, I don't know about you, but I can speak for myself. I meant to say the opposite. I meant to say, I know what you felt like at the lows in April. You were not pressing it there. You thought we'd have a move back to, I don't know, 5,700 or something. It's kind of overshot. The thing that is really interesting to me about that gap is like, what if we don't see any progress on the China trade deal? Are we going back and filling in that gap? And again, I don't think there's going to be any progress. I do think it's interesting to say that the pain trade was obviously higher. A lot of people thought that that was resistance there. You get a gap above it. So I also think it's interesting that the UK and the EU, we talked about this yesterday for a second, they're kind of coming up with this post-Brexit sort of plan. Brexit was in 2016. That was a bit ago, but we haven't seen a deal from the EU. We haven't seen a trade deal from Canada or Mexico. And, again, those are three of our largest trading partners, Guy.
I think the crux of this entire thing is, where are we right now? And, what's the logical move? Now, again, you're right to mention that we collectively thought, and if Amanda wants to do a longer term, show that trend line again from 2020. Yeah. And Amanda is great, by the way. We drew that trend line. We thought it could trade down to it. It did. We thought it would bounce from it. It did. I thought the bounce would be sort of 5,700. It obviously overshot. What now? So the question is, what's the next catalyst for this market to continue? Is it just lack of bad news? I mean, that is one, and passive investing continues to sort of rule the day. Is it NVIDIA earnings on the 28th, I think? Obviously, that's out there as well. There are a lot of people that are clearly focused on that, correctly so. Or to your point, do things get ratcheted up again? Now, I've seen some headlines from the Chinese saying they don't really like the direction that things are going. I don't think the market is taking that into consideration. But for me, it's more deterioration in the bond market. I think that's what's going to sort of, in my opinion, that's going to be first and foremost. And there's a question from Scott Rogers, time to get long the TLT. If Amanda wants to throw that chart up, again, I've said this, I will continue to say it. I think the TLT is going to visit levels that we last saw in the fall of 2023-ish. If you want to go longer term, you'll see it's sort of like 82.5. And that would suggest 10-year yields probably somewhere between, I don't know, 4 3/4 and 4.8. I can't do that math in my head, but it's going to approach levels that I think the market's going to get concerned about. We have seen bounces in the TLT. Every time it's bounced, it's sold off. I don't think that's going to change, and that's just my opinion.
Yeah, it's funny though. If I didn't know what that was, you know what I mean? If I didn't know what the inverse of that was, I would say, okay, you know what I mean? It spent a lot of time getting back to that prior low. That's support. I mean, let's just see what sort of happens down there. And, the macro is really confusing right now. I think that's probably an understatement, especially we went from all this uncertainty about trade, inflation, and the like, and then obviously a little bit of weak data. And then you say to yourself, okay, what's the Fed going to do? I have no idea. June 18th is going to be interesting. I'm also keeping an eye on the Dixie, the US dollar index. Maybe they can pull that up. It got to that kind of 102 level down from, or it's actually up from sort of 98. And if you want to back that thing out a little bit, if this thing retests, and I guess if you were thinking that yields were going lower, then you think maybe the dollar is going lower. But the 10-year is, like, to your point, kind of stuck at this level. So it'll be interesting to see what the U.S. dollar index does.
I agree with you. I think, and again, this was now probably 3 Sundays ago, maybe 4, that Janet Yellen was one on some of the Sunday shows, and she talked about this move in the dollar lower and yields higher, and she again pointed out that it's something we historically don't see. I will say, I think we're going to continue to see dollar weakness. I think we're going to continue to see bond weakness. In other words, yields going higher, and that sort of flies in the face of what the historical norms are. And as I mentioned yesterday, I had that conversation with Novogratz, I think it was last week, and he thought dollar yen could trade down to 130, and he still thought, despite the bounce in the dollar, that dollar weakness was going to continue to be a thing for the rest of the year. I will absolutely talk to Gary about that in a couple hours, and let's be curious of what his thoughts are. But the dollar weakness, by the way, for those playing our home game, is exactly what this administration wants.
Yeah.
And is exactly what Treasury Secretary Bessent wants, and it makes a lot of sense. Doesn't help the citizenry of this country because a weaker dollar is inflationary, but it certainly helps when you have $37 trillion of debt.
Yeah, you know what weak dollar should be good for is gold. Maybe we could pull the gold chart up here. It checked back, guy, to that uptrend that had been in place since late last year. If you just kind of look at this thing now at 32.81, it's up 47 points today. If you look at that, it's interesting. Let's go to a 1 year for a second. It never sniffed that 200-day at all.
Now, you still listen, you can draw a little uptrend if you want to go from
draw the uptrend, because
December to January lows, and you can see that uptrend. My eye sees the 3 points-ish. I think the 200-day moving average is definitely out there. I don't know what gets us there. Maybe it's a trade deal with China.
Yeah.
I mean, that's obviously, to me, that would be probably a catalyst for it. But there's your trend line. I mean, it's funny. You do this long enough and your eyes start to see things, and we both saw the same thing. So it traded down to a short-term uptrend from the beginning of this year, and we've bounced. You could actually draw a downtrend from the all-time highs, and that second point you can see, and then you can say we're going to be in this little short-term pennant formation, and which way are we going to break? You know what my view is. I think the break is to the upside. By the way, David Einhorn was on with Scott Wapner last week from the Sohn conference, I think on Thursday. And this guy, who is a storied investor, is really, really bullish, continues to be bullish in gold. And this isn't new. This is something
bullish
for a while.
of gold. Okay. This brings me to Clark Kemp. This is a question here. Clark Kemp, why are the great hedge fund managers like Cohen and Dalio saying that retested the April lows, but if you go on Wall Street Bets and people are only buying SPY calls? Very interesting.
I don't know what Wall Street Bets is.
It's that thing during the meme stocks. Remember, they got all the folks kind of geeked up about that. It's on the Reddit.
By the way, it's Dalio, it's Steve Cohen, and it's Paul Tudor Jones as well. So throw that in, and Stan.
Yeah.
So I mean, I'm saying one name, but all these people think we're going to revisit the lows that we saw in April. I am in that camp as well. Again, I started the show saying I'm really surprised that we overshot the way we have, but the fundamentals, and again, valuations do matter at some point. And I don't know if we're in a recession. I don't know that. We talk about being an economist all the time. But what I will tell you is last GDP print was not good. What I also will tell you is the historic norm in terms of valuation in a recession is mid-teens, if not even a little bit lower than that. Now, again, I want to be clear. I'm not saying we're going to the mid-teens, but even if you throw an 18 multiple on the $250 of earnings, you can see where this thing should be. I mean, you're talking about an S&P where fair value is theoretically about 4,500 or so.
Yeah. And, one of the things that, again, we talk about sentiment all the time, and it's hard to kind of put your finger on what that means. There's a whole bunch of different indicators, the CNN, fear and greed, and this and that, whatever. There's bull bears. There's, I don't know, like CTA. I don't even know what
ratios.
You even know what CTAs are. I don't even know what CTAs are.
Certified.
They're like momentum trackers or something like that.
CTA community.
Yes. You come out and you say, we're about as bearish as it's been since, 2001. And then it's as bullish as it's been since, the end of 2021, like all those sorts of things. I mean, and I think this is what we're kind of talking about with that sort of V reversal in the S&P 500. I mean, that was about as bearish in a short-term period as I can remember. We've talked about even in 2022 when we had that bear market, it was very orderly. We didn't have too many days where it felt like things were panicking. We didn't have too many days where the stock market was careening lower and you had yields going lower and you had the dollar this and gold going that or whatever. That was very indicative of what happened in April. But right now, the complacency seems insane.
By the way, it's an interesting word you use, complacency, because that's exactly what Jamie Dimon said yesterday. He specifically said the amount of complacency in the market around all the concerns he had, geopolitical risk, valuation, all these different things. And he's right to use it, and you're right to use it as well. It's amazing how people went from being so alarmed to so enthusiastic over the course of less than a month.
Yeah, and yesterday Carter was charting the VIX, and it's interesting. The last time the VIX was at 18, right? It was right before we took off a little bit. It's interesting. The S&P, was trading, I want to say, lower than here, by the way. Okay. So it's just kind of interesting to see where that is. It's remained a little bit elevated. And, you look at that 200-day moving average, who knows, Carter drew an uptrend here. He thinks it bounces from here. I'll take his word for it better than my technical sort of view here. But I don't know, man, if we continue to be this complacent, if the S&P continues to consolidate here at 59.50 or something like that, you could see the VIX start to melt. Now, if it doesn't, and it kind of stays bid, it's telling you a little something. I saw an article, I think on Bloomberg earlier today, that the kind of demand for both upside calls and the demand for downside puts are basically at an equilibrium. And what do we call that? If there's greater demands for puts than there are for calls, and you see the differential in the implied volatility, that's the price of options. Then you start saying, okay, there's more demand for that to the downside protection. So at some point, I would expect, and this goes to the question from Clark Kemp talking about the Wall Street Bets community, that is the more active trading community, the individual investor, that sort of thing. They think we're going higher. The big hedge fund guys think we're going lower. Those are the guys probably buying calls and call spreads on the VIX and buying S&P puts or whatever you want to say. But so we are, it seems like, at a bit of an equilibrium, guys.
Now, what is not an equilibrium is the chart of the day, and that's profit guidance and in terms of people raising. And look at this, because this is now falling off a cliff. And I'll read it, but the folks can read it at home. This reflects the share of the S&P stocks that have raised earnings guidance relative to the number that maintain or guided down. It's fallen to the lowest level in 15 years. So maybe listen, you can explain it away. You could say that's a function of people being able to do that in this environment. There's no reason to raise guidance right now. Why set the bar high, under promise, over deliver? Absolutely, I can buy that argument. But with that said, I mean, these are levels that we probably haven't seen in 12 or 13 years in terms of this. So I think it's just important to throw that out there as well. I mean, for as much optimism as there is in the investment community, there's the other side of that coin in terms of the corporate community, and it's manifesting itself in the lack of upward guidance.
Well, I think it's interesting what you said. You can explain it away. Actually, this chart was shared with us by Doug Cass, our main man at thestreetpro.com and Seabreeze Capital. And I think it's interesting. Doug does an amazing job kind of pointing some of this stuff out. He tracks a lot of this guidance. He's actually Johnny on the spot, like looking at S&P earnings and the kind of changes that we see. And again, despite this chart, we haven't seen strategists lower their S&P 500 earnings dramatically. And I think maybe it's kind of this wait and see approach to see what sort of deals that we have from a trade front. Because if we have like substantive deals with Mexico and Canada and the EU, then you can probably stop focusing too much on the downside for the S&P 500, because what I took away from earnings season is that I didn't see nearly as many companies using the opportunity to actually downgrade their guidance. This is saying something different than that. Is that fair to say?
No, it is fair to say. Listen, I think we raised all the right points around this, the reason, the explanation around this, but it's important to point out exactly what's going on and what companies are seeing, because I think there's clearly some sort of disconnect between, again, the investing public and again, the passive money that just flows in, and the other side of the equation, which is the companies that are people investing in. They're seeing something entirely different. We talked about Home Depot yesterday. Let's throw that chart up, because we thought, I know what we said. We thought it could spike through the 200-day moving average. We'll see what happens. Well, that's what's happening right now. If you look at it intraday, though, real quick, the stock, I want to say opened, and I don't have it in front of me. I think it was 389.
Yeah.
It's trading 380 right now. I'm not saying we're going to go through unchanged, but it's not trading particularly well, and it's doing so on pretty large volume. So if we were to trade through the 200-day, which we already have today, and then close down below through it, that should be concerning, just again, anecdotally for this stock. And this is one we talked about yesterday.
All right. So let's go back to that headline, though. And this is, comes a couple days after Trump was tweeting about Walmart, right? And kind of, we talked about it a little bit yesterday, saying Walmart, stop, like, don't raise your prices. And, these guys come out, it's a bit defensive by saying we're not going to raise our prices depending upon how long the trade war goes, right? So you have these input costs going higher, and then how long the economy hangs in there. I mean, it's a really interesting push and pull. Once the inflation thing takes hold, if we do have a protracted trade war, these companies are going to have to raise prices. Now, let's go to a 5-year chart of Home Depot. You ask yourself, what's weighing on this stock right now? You say, okay, that was a double top there, and maybe the stock acts, just fine if you think about where it is off of its prior all-time highs. But, there's going to be this push and pull. I think prices go higher before we start to see the economy weaken a little bit. And once prices go higher, it's really hard to ratchet them down a little bit.
Once it's like gas prices, once they get to a level, that level maintains, that it takes a lot to get them back down. In terms of Home Depot, and I think this is probably true for Lowe's as well, it's an interest rate play. I'm making it as simplistic as possible. I don't mean to, but if you think like me that interest rates are going higher, it's very hard to think that Home Depot has the tailwinds that it historically has had. It's, if nothing else, the tailwinds have gone, and probably you've seen some headwinds, and people are going to be strapped in a higher interest rate environment, and Home Depot is going to feel it. So I think what's going to happen today, here we're at 1120. I think we opened on the highs. I think we close on the lows on big volume, and then you decide what to do. But I don't think it augurs particularly well going forward.
Yeah, I always think this week and next is really interesting because we're a couple weeks out of really the crux of earnings season. As we think about financials, were almost a month ago, right? They were a month ago, a little more than that. And then you had big cap tech at the beginning of this month. Now you're getting retail, and a lot of the data has come in. We heard a lot. Obviously, we're just talking about what other companies had to say. We're thinking about what is the weight of a trade war on some of these consumers, on some of these retailers. And so let's just go to like a TJX for a second here, because they report, I think tomorrow, plus or minus 4% in either direction. And this is one of the names that you'd say to yourself, holy, look at that. Like, did they just invent some sort of AI chip 2 years ago? If you overlay that with like Target, a bunch of these,
Manna can probably do that.
I meant though, if you overlay the breakout in late 22 and you look at that performance in this thing, it looks like one of these kind of AI,
it looks like a tech stock, 100%.
And so they're supposed to benefit, right, in a consumer that's trading down, that sort of thing. And I get that, but where are you? I mean, valuation doesn't really matter.
No,
but
I listen. If you watch Fast Money, we've talked about TJ Maxx seemingly forever, and this goes back through COVID and before COVID. I mean, they win theoretically in every environment. You want to do a longer term chart, you'll see. I mean, this is lower left, upper right, outside of a couple moves lower as we saw during COVID. But what do I think? I think it's going to continue. We've had Dana Telsey on Fast Money a number of times. TJ Maxx continues to be a name that she loves. Is valuation a concern? Probably, but it's been a concern for a while. This to me is sort of like a Costco. It's if the stock sells off post earnings, you sort of close your eyes, wait a day, buy it, because a week from now it's going to be making new all-time highs. And I don't mean to be glib. I mean, they just are winning in this environment.
Yeah, let's go to a 1 year really quickly, though. And this kind of reminds me of some of the names that we saw into the top in late January into February.
Like Walmart, for example.
Yeah, you're just seeing like this grind higher. And, listen, I think the healthiest thing for a stock like this would be a check back towards that kind of 200-day moving average. And I'm not saying it's going there in one fell swoop, but, if it's a foregone conclusion that TJX wins in every environment, that sort of thing, it's probably not like the potential for a gap higher and a runaway breakout to me is not
slim.
particularly.
I agree with that.
Because you had literally in mid-March, you had this stock trading at 114, and here it is at 135. And it's one of the very few retail stocks that's trading this way. So, I'm not a buyer right here.
A company that everybody loves for a myriad of different reasons, but clearly has issues is Google. And Ben Wrightsey's that we've had on Fast Money a bunch of times that just interviewed Jensen Huang at one of the conferences. I don't know, in Taiwan or so. Anyway, he put out a note about 2 months now ago talking about Google and comparing it to Eastman Kodak, which he did not do that lightly. And we covered on Fast Money that night, and we talked about it and said, wow, that's pretty dramatic when you think about a company like Kodak, which dominated the landscape, and then overnight the world shifted under their feet. And to make a comparison like that, you have to take notice. Well, you've talked about this. The AI world does not serve Google particularly well.
Well, right now, it certainly doesn't. I think the sentiment is really bad. If you look at the stock where it's trading relative to some of the other mega cap techs, this one is still down 12% or so on the year. You look at like a Meta that some folks want to kind of compare it to is up 9%. Microsoft is up nearly 9%. If those are three of the biggest names that are meant to benefit from their investments in generative AI, whether it be building out the data centers or selling some of the products. I mean, with Alphabet, obviously the risk is just search and ad revenue attached to that. I mean, the jury's still out. They have Google I/O. This is their developers forum going on today. I'm sure there's going to be a whole host of announcements coming out of that. The only problem here is that the announcements look good and the stock doesn't rally, then you just have this thing, as it relates to sentiment. The stock traded nearly, 140 at the lows in April. It's a nice rally. I mean, it can't be, it's not above its 200-day moving average. I'm kind of hard pressed, guy, to see what they come out with today, and that excites investors right here because the existential threat, and that's what I think, Ben, is he the guy from Milius?
I think that's right.
And he's the one who's really like kind of dismissive of me when he was talking about innovators dilemma.
No.
I was a little bit because they were talking about Eddie Q. This was just a couple weeks ago. Wasn't that him?
I don't think it was him, but I know who you're talking about. There
was
the
Milius guy.
It
was definitely Ben.
But anyway,
all right.
Ben hasn't been on our show in a while, but I think you like Ben Reitzes. Anyway,
okay.
I'll go back.
Well, I don't dislike the other guy, but my point is if you think that Google is at risk right now, whether it's be a breakup, whether they're losing share, you remember it was Eddie Q who was under oath in the Google suit, and he basically said, we're seeing searches on Safari slow down or kind of miss. And the whole point there is that Google pays $20 billion a year to Apple for exclusive search, on iOS devices. And if that goes away for Apple, that's a huge hit to their services. It's basically pure margin, right? And then for Google, they would lose a lot of that search if Apple were to go out and do another deal. So they kind of both need each other. And that was the point I was saying is if you think there's an existential risk for Google, you could say that Apple has not been innovating. They don't have a strategy as it relates to generative AI. It's not on the phone. It was meant to be there by now. They have their WWDC in just a few weeks or so, and they're going to have nothing to say.
Look, if you consider Google a customer of Apple, which I think they if
you'd say a very important partner,
whatever word you want to use, if your partners start to do poorly, I mean, it's going to have some impact. Amanda made a nice little slide here, the AI rat race. I love this, but you can see, I mean, Microsoft over the last month has been doing extraordinarily well, and Google's the flip side. I don't know if you can put up a Google and Microsoft chart, but you can see it's been now since Microsoft reported. By the way, Microsoft had been a disaster since last July. We recently blew right through the 200-day moving average, traded almost to the prior high from July. Now let's see what happens at these levels. But you can see that we're pretty much in lockstep until a month or so ago.
Yeah, it's pretty staggering. I mean, we spent a lot of time talking about Microsoft. Let's just go back to that chart for a second here, how it topped out last July. And, the stock was just kind of there. It is kind of stuck in the mud for a while, really underperforming on a relative basis, many of those mega cap tech peers. Now, let's go to a 5-year for a second, because this was one of the earliest beneficiaries of the generative AI hype going back to the start of 23, largely because they had that investment in OpenAI. And, listen, there's been a lot of debate whether the way that they've integrated that to their own products and services and co-pilots, whether they're particularly useful or not. We know that Microsoft Azure, the cloud business they have, has been benefiting from it, partially because of that investment in OpenAI. A lot of the workflows for OpenAI were being done on Azure. So it is pretty interesting to me that here we are back towards those all-time highs. And we were talking about the gap in the S&P above the 200-day moving average. Look at the authority in which that kind of, blew through that. But if it doesn't kind of get through, I can't think, Guy, of a scenario where this stock gets above those prior all-time highs and then establishes a new range.
I apologize because I'm looking at the chart and I'm just trying to figure out I do think there's a chance that we've traded up to those levels, we fail, and then we have a sort of a test of the 200-day moving average. So I don't think, look, the Microsoft move has been staggering. It was just a month and a half ago where it really looked like it was falling on difficult times. So you go from 350 to 450, seemingly in a week and a half or 2 weeks. I mean, this is not, by the way, market cap wise, an insignificant company. So stay tuned for that. We have a question about McDonald's. If you folks watch Fast Money, a name that we've collectively loved for a while, throw up a chart because we continue to sort of push up against these levels, and do a longer term and you'll see what I mean. Like, we continue to sort of bang up against, that's going back to 18. If you shorten it out over the last 3 years, you can see what I'm looking at. I mean, this 320 level, a couple different times, has been somewhat problematic. I look at this and say, you know what? We're going to go blowing through this. And I still like, and that's a question from, by the way, Chris L. So I've liked McDonald's. I continue to like McDonald's. That sell-off, I think in the fall of last year, was on the back of some health concerns that they addressed very quickly, and now here we are.
Yeah, wasn't this also one of the names that reported just a few weeks ago, and they're talking about pressure on consumers?
100%.
So, the fact that it's kind of back here towards those all-time highs, it tells you maybe a little bit something about the trade down that we're seeing. So, I don't know. Hey, Guy, I got to bring this one up. So you dext me or dox me, whatever it is. I was in Boulder.
I text you. By the way, a character on General Hospitals I've mentioned that they killed off.
Dex.
And I like Dex.
Was it DEX?
I think DEX.
I don't know.
He was working for Sonny.
Yeah.
And then he left, and Sonny was going to have him whacked, but then Sonny realized the kid was okay, joined the police department.
What?
And then he was killed in the hospital by some guy.
How long ago was this? Was he killed like with the
No. They injected something into his IV line.
You know what I'm saying? Wait,
no, you're thinking of Godfather 2.
Who was meant to with a pillow?
Yeah. And then he got shot. It was New Year's Eve.
Yeah.
And all the
Hyman
nurses
Roth.
And all the nurses were sort of going, and they were having like little champagne to celebrate.
Popping corks.
Yeah.
And you know what was going on at the party, though?
And then the cops came in. They opened the door. They saw him. They shot him. Went right through the pelvis.
This was in Havana.
Anyway, Dex was killed off.
I saw something interesting today. How long ago was that?
Godfather 2?
No.
Dex?
Yeah.
Godfather 2, I think, was 75.
It was like
74.
A few years. 72.
74. 74. Dex was probably 6 months or so ago.
So it turned into like a crime thing or something in
What is
the
Well,
General Hospital?
I mean, Amanda knows.
Do you know these are the longest running shows on all of
General
TV?
Hospital, I think, started in 1963.
Oh, you want to hear a good story?
I love good stories.
All right, this is a great story. So I was at the RBC
Amanda.
private tech. You're going to love this, actually. The private tech conference. This was in LA. A lot of great conversations. I did some moderating with somebody from Perplexity. Deirdre Bosa was there too.
But love Deirdre.
All right,
she's having a baby in July.
She is,
right?
That was so nice of her.
Dox her? No,
it was so nice of her to come down and actually do. She interviewed Adam Bain and Rick Heitzman. She interviewed the chief business officer. Oh, that Dmitry Shevelenko that we had on a pod.
I loved him when he played for the Red Wings.
Okay. From Perplexity. Great conversation.
See, Phil knows.
So we had this really great party.
Anytime you say a name like that, you think it's a hockey player.
We had this really great party, just with all the attendees and all that sort of stuff. And then it got done around 10, and a really good friend of mine who lives in LA, who very sadly lost his house in Palisades. He's living nearby in like an apartment or something like that. He and his wife, I go meet him at the bar at Spago. You've been to Spago.
I've been to Spago. I went to Spago in the 90s.
So Wolfgang Puck was in Spago that night.
In the 90s?
Well, he was there in the 90s. He was there the other night. This was last Thursday night.
It's a good spot.
So I'm walking in, and my buddy Patrick and Liz are at the bar, and actually Heitzman was with me, and I'm walking in, and I'm like, hey, and like to my friends, and then all of a sudden this guy walking out through the door, he sees me saying hey, and he looks at me and says hey, but then he realizes that he doesn't know me. You know who it was?
It was the cook,
Rob Reiner.
No way.
I swear.
No way.
Rob Reiner. I shook his hand, and listen, in New York City, we got plenty of celebs, right? We got Guy Adami. We got, a whole host of people.
Real people.
But people generally leave celebrities alone.
In New York.
Because
they've seen it all.
And I suspect they do it in Hollywood. So I felt like a cheese dick. But he literally was looking at me, and I was looking at him, and he thought I said hi to him. And I said, hey, Mr. Reiner. I shook his hand.
Brilliant man.
Yes, I love that guy.
He's pretty outspoken about things. He was Michael Stivic in All in the Family.
You ready for this?
Brilliant.
I literally just saw 2 days before that, I saw a clip of the final episode
when he hugged Archie Bunker.
Yeah, it was a really nice moment.
I mean,
and
Carol O'Connor he was really crying.
then he
It was
went
emotional
down.
because they were leaving. The
Yeah.
Stimicks were moving to California.
Yeah.
And Gloria went to get in the car. She ran away crying because she was upset.
Yeah.
Edith went back in the house. She was upset. And it left Archie, Carol O'Connor, and Mike, Rob Reiner, on the porch.
Yeah.
And, they had a tumultuous relationship, but I think they sort of got to understand each other.
Him Meathead.
And they embraced.
Yeah.
And it was
Jacob
moving. I mean, I cried.
Maybe Jacob can
put it in
find
the
that
show
clip.
notes.
And it was really interesting because then Archie, obviously really disappointed, went back and sat in his chair. Edith came out
with a beer
and said, "Here's your beer, Archie," which she probably did. Do you like that accent? Here's your beer, Archie.
Well,
and then they both just sat down and it was kind of fade out.
Yeah, well,
pretty amazing. They used to do endings of shows like that much better than they do
All
now.
the Family, brilliant. People should we'll put it in the show notes.
Well, we talked about it actually. With the
By the way,
Jeffersons spun out of that,
of course,
right?
Rob Reiner, produced
Yeah.
and directed. I think he produced, but this is Spinal Tap.
Yep. He did.
Brilliant,
He was in
movie.
it. He was doing the interview, you know what I mean, where they did the up to 11.
Amanda's not
No,
happy.
that's fine.
What do you cats? This is from Lee J. What do you cats? Put that up. I just like the fact that he wrote cats. What do you cats think about these bombed out oil and gas names? I like Lee. He's got the hat on. He's like got his head askew. Bill just did a Lee imitation. How many times do you think Lee took that picture? Right, Bill? I mean, you know what I'm talking about. Like, no, that one sucked. This is the one I'm going to use. Listen, I have been so wrong about energy for so long. It's hard to even say. I mean, I think valuation is compelling, but I've thought that forever. Crude oil obviously is creating a bit of a headwind. It can't get out of its own way. I don't know what to tell you. I mean, I'm just sort of going to do a wait and see approach at this point.
All right, so this is a good segue. So if crude oil can't get out of its own way, if we start seeing weak demand globally because growth is kind of slowing, which brings me to what do you do with like these electric cars? Because if oil is not going up in a meaningful way, gasoline prices are not. Like, do you need to buy? I mean, listen, there's a whole host of people who buy them for, environmental reasons and the like. I think everyone in America who feels that way probably already owns one. Is that fair to say? And if you just look at Tesla, before we do Rivian, if you just look at the delivery numbers, I mean, last year, I think they did 1.9 million. Half of those are here in the US. This year, they're supposed to do 1.75. That's consensus. This guy, Troy Teslike, who I get his newsletter, he's at 165 or something like that. So, this headline, Elon Musk commits to leading Tesla for the next 5 years. For him to do that, it really is probably him leaning in to robotaxi, leaning into robotics. That's what all the bulls in the stock, they say, don't look here in EVs anymore. It's all about this. I'm taking the over on all that. But I think the fact that he is not as meaningfully as much in the government, if you can really focus on robotics and robotaxi, and there's going to be a robotaxi event, I think in a few weeks or something like that, I'm kind of a seller. I think they probably push that out. I don't think there's any there right now, but that leads me to Rivian. And, this is one, it's had this huge rally. Just look at that, right? And then pull it out to a 5-year or whatever. It went public, I think, in late 21. I mean,
nowhere.
That's insane, though. I mean, but that could be a coil
is
spring.
This the one? I should know this. I apologize. Amazon has a big stake in this, right? And doesn't like the Saudi investment fund?
No, that's Lucid.
Oh, that's Lucid. All right. So this is Rivian. I mean, Amazon. It's almost like they have an upside call in this name, right?
Yeah, and part of it is that they contracted with Rivian pre-IPO to make the delivery vehicles that Amazon have. You'll see them if we're in the city, so you don't see them in the city, but you'll see them a lot in the
burbs.
In the burbs. All right, so like I said, I was in Boulder yesterday. I got back.
So
it's really interesting. So Elon's brother lives, he's on the board, and I'm totally spacing on his name. Shri, I don't know what the hell his name is.
Amanda will
no, I'll tell you in a second.
Phil will tell us because Phil's not doing a damn thing right now.
What's his name? We'll put it in there. He's really tall. Remember we saw him at iConnections? He's like massively tall.
He had the party. He hosted the party.
No, and he had the cowboy hat here. Oh, Kimball Musk. Okay. So Kimball.
Beyonce has a cowboy hat.
Kimball, this is really funny. So Kimball lives a block from my brother. Okay, like 200 yards. And in front, he's got a couple Teslas, as you might expect.
Well, of course.
The next house over, No shit. Or maybe it's 2 houses over. It has 2 Rivians sitting right. I mean, that's kind of a cool kind of flex.
Is that what they call that, flex?
Calls it flex. And you see a lot of Rivians, and this is purely anecdotal, in a town like Boulder. It's a very liberal town. I think that people, you know what I mean, or whatever. I just thought that was kind of an interesting sort of thing. But let's go back to the Rivian chart for a second, the longer term one, guy, because when you see something like this, I mean, it's kind of a coiled spring. Now, it's had a big rally. Short interest is about 19% or so. And let me go to the holders for a second here, because this is what you were getting at.
I'm going to tell you.
Amazon is the largest holder at 14%. Volkswagen at 8.4%. And then you have the usual suspects, Vanguard, BlackRock, Bally Gifford, all the,
all right, so this is, by the way, this is on a t-shirt. This is a static chart. Let's go to a 1-year chart. And this potentially, if you can get through the levels that we saw last July, which I think is about 18, this will be a textbook, I think, bearish to bullish reversal. So this is one where you want to play stock market here. That's fine. I'd rather actually buy a breakout above 17.5, 18. And then this thing could be, I don't want to say off to the races, but it could trade low 20s pretty easily and nothing's changed.
Yeah. I mean, one of the things I'll just mention, and, like oftentimes people say, well, they have a ton of cash. Well, they're losing a lot of cash. So there's a $19 billion, equity market cap, and then they have $7 billion in cash, $6 billion in debt, but they're losing a lot of money every year. The story reminds me a little bit of Tesla going back to 2010-11, where the production was not particularly big. People were coming up with these stats. They lose, how many millions per car that they produce. Well, that changes pretty quickly once you get to mass production. And I also think it's interesting, when they reported a few weeks ago, they actually took down their production number a bit, and the stock's acting this way. So, I mean, if you're looking for a pure play EV, this is one of it. Lucid, to your point, the Saudis own this thing. I think they own a ridiculous amount of it. Like, these companies are not going away.
No.
So that was it.
All right, we'll see. I mean, anyway, look, this was fun. I had to take a leak in the car when I left at like 9:30. By 10 o'clock, I had to
use a Gatorade bottle or
I had to take a leak. No, I still got to take a leak.
Oh.
It's now 11:42. What are you laughing at?
Well, it's a thing that people do. They do.
Who does
they
that?
use Gatorade bottles. You better have the right size Gatorade bottle. Remember those?
Need a big one. Right, Bill?
All right. This got
your beard looks good. Did you trim it?
It's a ginger beard.
No, but if I don't take a leak, it's going to be a problem.
Jeez. And then you have Gary Cohn.
I got Gary Cohn. But I've enjoyed this.
Will you come back to us and give us a little 411 tomorrow, what Gary had to say?
I mean,
all right. Put in the chat if you have any special questions that guys should ask Gary Cohn. The one thing I wanted to say about the Gary Cohn thing, I know you got to go, is like he came in as the vice chairman. Sometimes a company like that, they're so like focused on the tech and everything like that, that, it takes somebody, it takes somebody like that to kind of expand their worldview a little bit, maybe get a bit more, I don't know, rational is the way they think about their business.
Granular. It's like companies, like biotech companies that are run by doctors, which respectfully, sometimes you need like a business person to come in and sort of see the forest for the trees.
I like that.
You know what I did?
Yeah. Okay. Thanks everybody. You started out with me alone. That must have been brutal. You end this thing.
Long. I got here as fast.
I know.
But by the way, the elevators here suck.
Oh my God.
And they're people that get on like the 5th floor and hit 7. Get on the effing stairs. They say, all right, wise ass, you could have gotten the stairs in the foyer and gotten here. Yes, I could have. Yes, I could have.
I don't even know where the stairs are.
Nor do I.
We should know where the stairs are.
But it's unbelievable. And the elevators, my God.
Now these Palantir nerds all over the place.
And they're always talking shop in the elevator.
No. You know what? They don't even talk to each other. They're like the rudest group of people. And you know what I saw today? When these guys get off the elevator before the women, you want to smack them a little bit, don't you? It's a Johnson move.
Johnson move.
I just used the guys. That could be a great t-shirt.
That's a Johnson move.
That's a great t-shirt. All right, everyone. We'll see you tomorrow at 11 o'clock. Thanks for